Morning, everyone. This is Sonny. The first thing I'm doing this morning is selling Gilead. Gilead's going crazy here. It's dropping. It's a position that I put on before. It's just went down about $1 a share because of the bad news that they had over the weekend, and I just have to get rid of it. And then I'm going to go through everything with you guys on what we're doing here. Okay, we're going to get that thing out of the way here. Okay, it was executed at 75.38. Let's go over to my tracker here. I will put down 75.38. In this box here. We'll auto sum it here. Okay. All right, here's my tracker here. What happened over the weekend? Apparently there was some news that came out on Gilead where one of these big investment groups sold a bunch of their shares, dumped some of their stock, and it was not favorable for Gilead. So I was out of my my covered calls on Gilead. As you can see here, it picked up about 3% here. Yeah, I picked up $269. So that kind of offsets my loss on this. Okay, so so I might have lost maybe $240 or something like that, maybe. Okay. Okay, this is a good tracker right here. I might as well cover this tracker right here on my objectives here. This report was produced so I can see what my trades are going to be, and I started at around $24,000 in this account to show you guys on how I make money. Now I also do this. I do a lot of selling puts. Okay, but this account here, I'm going to focus more or less on selling covered calls. Okay, on your positions. Okay, there's currently, well, now I only have 2 stock positions, but they're the same title in here. The reason why I did that was ET dipped a little bit further, and then I did dollar cost averaging, and I picked it up at 71.10. Originally, I picked it up at 74.10 for the first 1,000 shares, but I did a dollar cost averaging once it dipped to 71.10, and I did that for a reason. Okay, it's all about making money there. Plus, I'm picking up this dividend. Actually, it's going to be $5.19 2020 when I get that $305 that's going to be added to this. So far, I made off of my covered calls against the cost basis here, I made 2.42% on my money. Okay, now what I did was I took this money out of one of my savings bonds. I mean, not a savings bond. It was a CD that I got paid 3.5% for, and I put it into this account so I can show you guys what I'm doing and how I can help you guys out on creating income for yourself on a separate account as well. All right. So far, on my first 1,000 shares here of ET, I picked up all this premium. Now, what I did here, I rolled it over from a 750 to an 850 because it was in the money at the time, and it was going to mess with my dividend. I want to collect that dividend. And I don't want to get rid of these shares here. I want to keep these shares for long term. Okay? Because there's been a lot of private investment money been coming into the stock, and I'm jumping in. I'm going to keep those 1,000 shares here. Now, my objective for these 1,000 shares of ET was only to do an in-the-money, sell in-the-money cover calls. Okay? So the most I'm going to make here is going to be, because I did a call, I sold a $7 in-the-money call, and then expires on the 20, the strike price is $7. It expires this Friday. I just wanted to pick up an extra, 2% on my money for the week for owning this stock. Remember, I purchased the stock only $5.13. Okay, so I'm going to collect within, 10 days of owning a stock, 2.3%. Okay, so now I'm not going to do the same thing I did up here by rolling over to a higher price, and going through this process here, because I'm not keeping these shares. Because remember, we got to stay diversified. So I only took this action because I needed to take this action to keep the ET. Now, just so you know, let's cover ET a little bit. Let me go back up to, all right, we sold this baby here. Okay, see, look at this. Gilead just keeps on falling. Oh man, luckily I got out of that. I think Gilead's going to go way, way down. All right, let's go back to my financial home here. All right. All right, ET, I mean, look at this puppy. It is just going up. Okay, it's only because today is an up day. And look at the crude oil. Okay, it went up 11% in one day. So, Powell had some positive remarks, and this vaccine trials are going on, so therefore the market jumped up. Even though I think the market is overvalued, in my opinion, but it's just incredible. Okay, now let's open up ET here. Now I got to tell you something about ET here. Is ET can only be placed, because it's a limited partnership, can only be placed in a non-IRA or a non-401k. Okay, so if you decide to buy this later on, remember, we can lose money at this, or you can gain money. Okay, but remember, this account is only based off of performing cover calls against a position. Remember, my CDs were only paying 3.5% at the time, and now CDs dropped down to about 1.5%. So I have to take action with these CDs that are maturing on me. So I'm just taking a little bit more risk and going into the markets. Okay, but I'm treading lightly on this. Okay, from time to time, I'm going to be changing positions, and I'll tell you why I change positions. Okay, so maybe I lost a little bit of money over there. Okay. All right, here we are. Now we're back. Okay, now what I have to invest is $9,991 into the account, because I currently have two positions that are open. This Gilead, whoa, that price dropped down to $74.35. Whoa, It's still dropping even though we're out of it already. Sometimes you have to do what you got to do to get out of a position. Now this puppy here, this ET has just been popping. Look at this baby here. It's just incredible. I've only been in these positions since, I got into the first position basically at the end of last month of 1,000 shares. Remember, I purchased it at 74.10 for 1,000 shares. And then the second position I picked up on 5/13 at 71.10. 1,000 shares, but remember, I got in the money a strike price of 7 against a 22 May option, a call option. So I sold a call against the stock, a call option against the stock. And here's my call options here. As you can see, they're negative territory because the price is going up. See that 7.0? Okay, it went up to 67.50 cents. So if I would have bought these calls, okay, and then the stock went up, I could have sold it at a profit of $400 today of buying calls. But the problem about buying calls is, you got to give up a premium. You give up a premium, and then, you're just giving away money. Me, I'm okay with making that, my small percentage here. I'm going to make 2.3% regardless how high it goes. It doesn't matter. Okay, now if it drops below my price here, I still get I'll get the full $274 that I got in premium. Okay, one day pop like this doesn't mean it's just going to keep on going up. We all know that the market is overvalued. And remember, we got a whole week to get to that 22nd of May. You see up here what I did here though? I turned around and chased that big money. And what happened? The price dropped. It dropped down to 71, 10. I should have just let that thing ride and it would have rode it down. Okay, because I only picked up a premium of 224 at the time at a 750. At 7.5, $7.50 when I sold that cover call. Okay, so I chased it. And the reason why is because I wanted that dividend and I wanted to keep the stock long term. All right, now this is not called a dividend. It's called a distribution when you're talking about limited partnerships. Okay, so you got to understand that for tax ramifications. Even though I'm not a tax advisor, I would consult your tax advisor on this. And that's why you can only buy limited partnership companies. Collecting distributions, not dividends, but collecting distributions every 3 months, out of non-IRA and non-401k brokerage accounts. Okay? When I'm looking at the only thing, my objective is on this account here is to make more per year than I was making on my CDs. Okay, I got a separate 401k account. Not 401k, but a Roth IRA and a traditional IRA that I do other trades in. But I only want to show you an account that we're going to do covered calls in, with no margins whatsoever on this account. Now, coming up in August, I'm going to do a $50,000 account. That's when one of my CDs mature for 3.5%. CDs mature, and we're going to do we're going to do ETFs. Okay, we're going to do ETFs, and we're going to do cover calls against those ETFs. Okay, so that's going to be exciting. That's coming up. I'm working on these different ETFs and how we're going to do it and the strategy behind it. But we're going to make money, okay? So we're going to beat our CDs, okay? This is all about beating the CDs that are becoming matures, okay, and we're trying to get more than our 5 or 3.5 that we were getting, but my objective is to get between 5% and 10% a year. Now, look at this. These are like 2.3 within 1 week. We're gonna let this thing get called away. Okay, this stock is going to get called away. I don't care how high the price goes. I'm not chasing it. Remember, when I chased it last time, I had to pay a price. Okay, I'm going to let this thing go away. I collected my cash. Remember, from 7. So our profit's going to be somewhere around 164 when it gets called away. When this gets called away, it's going to be 164. So $164 for 1 week, and investing 7110 gets us 2.3%, better than the CD rates. And this is 1 week. Now think about this. If we can do that every week and get over 2% a week, think about that. That's 104% for the year. Okay, let's get real here. We just need to go for, in this market right now, we got to be very careful and tread lightly. Just like here, I had to get out of this position. Why? Because some bad news came out. We already know what these guys are going to do over the next year. They already put all that stuff out. They're going to spend $400 million less. And then a bunch of these other investors jumped into it. You know, oil prices went up. You know, these guys are a storage company. Now, is there better companies to get into in this space? Yeah, but they're higher priced. Okay? They're a lot higher priced. And let's go back here to, let's go with the 1 year here. Okay? These guys dipped down there by $4, $5 range here. Okay? These guys look very attractive to me, but I had to see what the oil prices were going to do. The oil prices came back, and that's when I took the leap. Okay? Yes, there's other companies here that you can go into and you research and you pick any company you want to, LPs. But remember, these are all LPs, okay, limited partnerships. You got to be careful with them on the tax situation, okay? You want to keep them long term, okay? Because look at this. You're getting a 16% dividend. On top of the dividend, I'm going to keep doing covered calls against this position. And I might have to, I'm going to do it every 2 weeks instead of every week on this one. The only reason why I did the weekly call on the other one, the other 1,000 shares, was just to pick up that 2.34% return for 1 week. Okay, but I'm going to pick prices that are every 2 weeks on this. So let's see what these options are looking like here. Okay, here's the option chain on Yahoo. We got a different option chain in using Merrill Edge, excuse me. These are the call sides up here, and these are the put sides down here. We stay up here because we do covered calls. All right. So, right now, let's see. If I was going to chase this thing, look at that. 7 in the money. This is in the money, guys. Remember, I paid $7.11. So 11 cents is partly in that money. Now, if I wanted to chase this thing, even though I was at $400 and so here, it would cost me somewhere around $6.75 to call up, to change the value. But remember, I picked up $270 on it already. So $275 or whatever. Let's see. Let's see my option tracker. Yep, I picked up, they gave me a premium of $274. So $274 is that, I mean, I could do a rollover on this. If I wanted to try to keep it and rolled it out for another week, but why would I do that unless I'm going to keep it? And then what I have is I have $15,000 out of my $24,000, you know, over 50% in one position. So we don't want to do that. And that's the whole purpose of me coming out of this position within this week. Now, yes, it's going to settle down. This price is going to settle down. It's not going to be as high. It shot up real high, and then it came back down. All right, let's check finance right now. Let's see what the prices are going for. Let's look out. Let's say, hypothetically, if we decide to go out. One more week on this option. Look at that. It's still at 772. Whew. This puppy has popped. But see, I would have to come out here and get the, if I got to 750, I would get a premium of 40, let's say $40. I mean, $400 at a 750. That'd bring it to 790. Let me look here. So that'd bring me at 790. And if you add, let me do this here first. Let me update this real quick. Okay. All right, right now it's at 78 cents. Okay. So if I only get 40 cents on top of 750, that would be 790. And here it's $7 call plus 78 cents. Okay, so I'll make $110. But that's only if the price stays up there. If the price drops back down to $7 a share by Friday, I'm in trouble. I lost money. So why would I mess with this? Or, excuse me, that gives us an extra week for it to stay at that level. But why would I mess with it? So my objective was to let this get called away. I will keep my money. You know, it's going to get called away at 7, but I also get to keep that premium. They don't charge me anything extra. Nothing happens. I get to keep my money over here. I get to keep my 2.3% return, and I'm not worried about it. Now, on the other hand, we have a problem here, Houston, because now my 750 for 29 May just went up. Let's look at the 750 here. The 750 call that expires on 5/29. Currently, the price is now 44.5 cents per share. Remember, one call option is 100 shares. Okay, so 10 call options here. We got 1,000 shares to cover 1,000 of ET. Okay. Now, going back to this position, I have a total of, that's $450. 444. If we went back here, the most we can do is in 2 weeks. Let's look at the options here for the 29th. What? I'm going to take us, when I'm going to go for $160, you know? So what our plan is, we're going to let this puppy roll out, to work itself out. Okay? It's at $7.73. So that means when we get closer to it, to this date of 29 May, and let's say the stock stays around that same price, because it's going to drop. This is one day that the market jumped up. This is one day of this crude oil stuff. Trust me, somebody's going to start pumping some more oil. Okay? And remember, we're a storage facility and we transfer, it's a huge pipeline, what it is, across the United States. Okay? And they charge the usage of their pipelines. Okay? And that's why I got into ET, or Energy Transfer. LP, limited partnership. Again, limited partnership. Limited partnership. Can only be, you can only receive distributions in a non-IRA account. And remember our objectives. We're trying to beat our CD rates that we're getting at 3.5% a year. See, we're making more than that. We're going to make more than that in this account. Okay, now let's go back to. I want to look at back over here. The price is $7.75. Okay, the price is $7.75. We have a call option for the $7.50. And it's going for about 45 cents. So that would say that the price right now would be $7.95. But it's not. It's $7.75. So that means 20 cents of that is future value. You know what I'm saying? It's premium. So what's going to happen here is, if the price stays the same like it is today, this price will drop by 20 cents before expiration. So it would drop $200 before expiration. So it wouldn't be up you wouldn't be losing $251. You'd only be losing $51.51. But then we're going to do is a rollover. Okay? We'll roll out. Now, what we're going to have is ammunition. Down here, remember, we're going to have 1,000 shares sold coming up here this weekend on the 22nd, this Friday. So we're going to gain that little bit of premium there of about $164. Okay, a profit is going to be here in the settlement date. We're going to collect $164, which is 2.3% return on 1 week of risking $71.10. Now, there's no CD that's going to pay you 2.3% for 1 week. Okay? There's no bond fund that's going to pay you 2.3% for 1 week. So you have to understand my logic. Now, this account is not for tactical growth. Okay? This account is based off of premiums. We're going to collect premiums. Okay? Some stocks we could get wrong. Okay? The market changes. That's why I have to stay away from the medical stock. That was the only stock in the medical field that I was confident. $269. So it offsets a loss. Let's say that I own this stock and I didn't do any options against it. I didn't sell any covered calls. I didn't receive none of these premiums. I would have lost straight up $507. But because I received premiums from it, I only lost $230. So yes, I can take that as a loss. And yes, I'll be able to write that off on my taxes, because remember, you can write off up to $3,000 a year on your taxes when you have a loss. So I'll put that in my loss column. Now, we're not day traders here. We're kind of like swing or weekly traders. You know, we try to find positions to go into that we're going to be able to pick up some premium and try to stay in those positions. See, this is my long-term pick. I'm not selling this. Why? Because of capital gains. I want to go into long-term capital gains. In order to get a long-term capital gain with a stock, you have to own it for over 1 year and 1 day. And it's going to be kind of weird, because whatever I pick up in premiums, or excuse me, not in premiums, but whatever I pick up in dividends here, they're called distributions. So it's going to offset the prices of the share price. So this price is going to affect this price for tax purposes. It's going to be interesting for tax time. Okay, because this is the first time I'm doing it outside. You know, I haven't been buying these LPs before. Okay, so my tax person is going to have to, he's going to have to deal with that stuff. It's not a problem. But this distribution is taxed differently than a dividend. And you guys can research all that and talk to your tax advisor on this. And remember, the market goes up and the market goes down, and you can lose money. But why not pick up some premium when your stock goes down that you like? You know, everybody has their stock that they like. Okay, you can have it in your retirement account and you can do these covered calls. You know, if you don't trust the market, I don't trust the market, because look at what it done. It dipped big. Okay, and it's overinflated right now. We all know this. You know, if you look at the P ratios and all that other stuff, price to earnings, shoot, companies not even making earnings and their stock prices are way the hell up. Excuse my language. So, okay, we're out of a bad position here, and it's getting worse. 74.13. Yeah, thank God we got out of that one. Whew, we would have lost another dollar on that. And that would have been $100, by the way, because remember, we had 100 shares. We're buying 100 shares to up to 1,000 shares of a stock. Okay? And then we turn around and sell covered calls on it. You know? And we do that initially on the onset together, so it offsets your cost basis when you first go into a position. And we'll go into that later once on my next video when I purchase something. But right now, we're doing well. I mean, ET's doing what it's doing. You know, we only have one stock out there. Not worried about it. Why? Because I'm making enough money with my dividend coming in the next day or so. That's an extra $300 to the account. I'm going to be over my original $24,000 I started with. And once these options come to pass this week, I pick up another 2.3% this week on that one shares when they turn around and get called away. And it's going to get called away, and I did that on purpose in the money. Because as you know, I wanted to do the dollar cost averaging against that one stock because it dropped so much. So I'm keeping this puppy here. I like the company. And this is our first video, you know, trading with Sonny. And I hope you guys liked the video. And I'll talk about other things too if you want me to. I mean, look at some of these prices. I mean, my God, look at Macy's in an up market. Oh, look, the market's turning. All right. See, the market can go up and it can come back down. Oil price is still crazy up there. But this is a holding that I have in my IRA account right here. This one's doing great. I'm selling puts against this stock here. You know? And it went up 12.9% today. Now that thing needs to come down a lot lower for me to sell some more puts against it. You know, what I'm going to do is probably cover some of my positions because when you sell puts, you know, we'll get into put selling later. Okay, let's just stick with cover calls. What we do in cover calls, our objective is to buy companies that we want to keep long term. Remember, we want to keep the company for 1 year or greater because remember the capital gains. You want to get here with long-term capital gains, not short-term capital gain. Now, all our options are going to be taxed at a short-term capital gains, but when you sell the underlying stock, you know, a year from now, 2 years from now, 3 years from now, whatever, you're only going to get charged with long-term capital gains. And so all we're trying to do is pick up premium. And yes, if it's a stock that pays dividends, that's good. But we're not really looking at them paying dividends as well. Because right now, a lot of companies are hurting, so they took off their dividends. Okay, so that's what our objective is for this account. We're starting with $24,000. I'm going to put another $1,000 in at the first of the month just to round it off at a $25,000 account. Okay, and then what we're going to do is we're going to add to this account every month of $500. And we're going to see how we do at the end of the year. We're going to go through this every week. I'm going to bring you, I'm going to bring it to you live. I'm going to hopefully bring it to you live one of these days. But I got to get 1,000 subscribers in order to do that because YouTube won't allow me to do that. So I appreciate you guys spending a little bit of time with me today. I know this video is a little bit longer than expected, and we're going to try to cut down these videos to keep it short so it's not too lengthy. We're going to get more into what cover call is if you need more information. I might, you know, if you do need more information on that, I can do a video just on cover calls, okay, or just on put selling. Okay, these are the two instruments I want to use, okay, because I got burned before by owning stock, and then the stock went down, and then I lost a lot of money, okay. I did that a couple of times. I threw some accounts in a number of years ago. This was over 15 years ago, and I got burnt early. So I do other, you know, I do other ways of investing, and my 401ks are doing great. Everything's going great. You know, like I said on other videos, I'm a debt-free person. You know, if I can't pay cash for it, I don't have it. Okay, we own our own vehicles. We got brand new vehicles. You know, this house has been paid for. Been debt-free for years. But I want to teach you guys, give you guys a little bit of tools out there to help yourselves. You know, and I want you guys to start researching companies. And if you guys see a good company that you recommend, hey, put it down there in the comments. You put it down there in the comments. All of us can look at it. Maybe we can comment on it. Maybe that'll be our next stock. Okay, but remember, we gotta pick up some premium off the stock, at least every 2 weeks or once a month. Okay, so it'll be easier for our tax people at the end of the year. Okay, otherwise we're gonna have a million trades out there. But anyhow, I appreciate you guys listening, and again, I know this was a long call, and I'll close out. This is Sonny. Closing out here, and don't forget to subscribe so you can stay in tune for my next videos. All right, this is Sonny. I'm out.